Hello, and welcome back to the channel. Today, we're exploring one of the most influential books ever written on personal finance, Rich Dad, Poor Dad by Robert Kiyosaki. Whether you're just starting out on your financial journey or looking to refine your wealth-building strategies, this book is packed with life-changing lessons that can help you take control of your financial future. In this video, we're going to dig deep into the core ideas of Rich Dad, Poor Dad, discuss the contrast between the mindsets of the wealthy and the middle class, and provide you with actionable steps you can start implementing today. Stay with us until the end. This might just be the video that sets you on the path to financial freedom. If you enjoy content that empowers you to take charge of your financial destiny, please give this video a thumbs up and consider subscribing. Your support enables us to continue producing high-quality content that makes a difference. Part 1. The Tale of Two Dads, a story that redefines success. Let's start with the story that forms the backbone of Rich Dad, Poor Dad. Robert Kiyosaki grew up with two father figures who had completely different philosophies about money, success, and life. These contrasting views profoundly influenced Kiyosaki's approach to wealth and financial independence. Poor Dad, his biological father, was a highly educated man who held a PhD and worked in education. He believed in the traditional path: study hard, get good grades, find a secure job, work diligently, and save for retirement. Despite his education and dedication, Poor Dad struggled financially, living paycheck to paycheck and relying on job security as his primary source of income. Rich Dad, his best friend's father, did not have a college degree but was a successful entrepreneur. He believed in financial independence through entrepreneurship, investing, and making money work for you. Rich Dad's approach was to focus on acquiring and building assets that generate passive income, ultimately leading to wealth accumulation. The contrasting advice Kiyosaki received from these two men highlights a fundamental truth. Financial success is not about how much money you earn, but how you manage and grow that money. While Poor Dad believed in job security and playing it safe, Rich Dad taught the importance of financial literacy, risk-taking, and strategic investing. Ask yourself, which mindset are you currently following? Are you working for money, or are you making money work for you? Understanding where you stand is the first step toward making a positive change. Part 2. The Value of Financial Education, Building a Foundation for Wealth. One of the most critical messages in Rich Dad, Poor Dad is the importance of financial education. Kiyosaki emphasizes that traditional education systems focus on teaching students how to become good employees but often neglect essential financial skills that are crucial for achieving financial freedom. Without financial education, people are more likely to fall into the trap of working harder for money rather than making money work for them. Many end up in the cycle of earning, spending, and saving without ever learning how to invest or grow their wealth. Consider the common scenario where someone earns a high salary but still struggles financially. Despite making good money, they might lack knowledge about investing, managing debt, or understanding how taxes impact their wealth. As a result, they may live paycheck to paycheck, with no real plan for achieving financial independence. Actionable steps. Start small. Begin by reading books, watching educational videos, or taking online courses on personal finance. Topics like investing, real estate, taxes, and entrepreneurship are great places to start. Financial statements. Learn how to read financial statements, as this will give you insight into how money flows in and out of your life or business. Practice. Apply what you learn by creating a budget, investing in small amounts, or managing a side hustle. By improving your financial literacy, you'll be better equipped to make informed decisions that can lead to long-term financial success. Part 3. The Difference Between Assets and Liabilities, the Foundation of Wealth Building. One of the most pivotal lessons from Rich Dad, Poor Dad is understanding the difference between assets and liabilities. This concept is fundamental to building wealth, yet it's often misunderstood. Assets. These are things that put money into your pocket. They include investments like stocks, bonds, real estate, and businesses that generate income. Liabilities. These are things that take money out of your pocket. Common examples include mortgages, car loans, credit card debt, and any other expenses that don't generate income. Rich Dad explained to Kiyosaki that the wealthy focus on acquiring assets, while the poor and middle class often acquire liabilities, mistakenly thinking they are assets. For example, many people consider their home to be an asset. However, If the home is not generating income and is instead costing you money in the form of a mortgage, maintenance, and taxes, it's actually a liability. Imagine two individuals. One invests in a rental property that generates monthly rental income, an asset, while the other buys an expensive car with a loan, which requires monthly payments and depreciates in value over time, a liability. Over time, the first individual's wealth grows, while the second individual's financial burden increases. Actionable tips. Identify your assets and liabilities. Make a list of everything you own and categorize them as assets or liabilities. This will give you a clear picture of where you stand financially. Shift your focus. If you find that you have more liabilities than assets, start shifting your focus toward acquiring assets. This could mean investing in stocks, starting a side business, or buying real estate that generates income. Minimize liabilities. Work on reducing or eliminating liabilities that are draining your finances. For example, pay down high-interest debt or avoid purchasing items that don't contribute to your wealth-building goals. Understanding this distinction is crucial to moving from a mindset of working for money to making money work for you. Part 4. Minding your own business, building multiple income streams. A key lesson from Rich Dad Poor Dad is the concept of minding your own business. This doesn't mean starting a traditional business, although that's one option, but rather focusing on building your own wealth through multiple income streams. While having a job is important, Kiyosaki advises that you should also work on building your own assets, things that will generate income regardless of your job. This could be through investments, side businesses, or other ventures that create passive income. Relying solely on a job for income can be risky. If you lose your job, your primary source of income disappears. By creating multiple income streams, you protect yourself against financial setbacks and increase your overall financial security. Real estate. Investing in rental properties can provide you with steady income. Stocks and bonds. Building a diversified portfolio can generate dividends and capital gains. Side hustles. Starting a small business, whether online or offline, can create an additional revenue stream. Intellectual property. Creating and selling digital products, writing a book, or licensing your creations can generate ongoing income. Actionable steps. Assess your skills. Identify skills or knowledge you have that could be turned into a profitable venture. This could be anything from freelance work to creating an online course. Start small. You don't need to quit your job to start minding your own business. Begin by dedicating a few hours a week to your side project. Reinvest earnings. Use the profits from your side business to invest in more assets, creating a cycle of wealth building. The idea is to build a portfolio of assets that can generate income independently of your primary job, giving you greater financial freedom and security. Part 5. The Power of Corporations, Protecting and Growing Wealth. In Rich Dad Poor Dad, Kiyosaki introduces the concept of using corporations to protect and grow wealth. This is an advanced strategy, but it's one that the wealthy use to their advantage. Corporations are legal entities that are separate from their owners. They can own property, enter into contracts, and are subject to different tax laws than individuals. The wealthy often use corporations to shelter income, reduce tax liabilities, and protect personal assets from lawsuits. One of the biggest benefits of a corporation is the ability to deduct business expenses before paying taxes. For example, if you own a business, you can deduct expenses such as travel, meals, and even some entertainment costs, reducing your taxable income. Let's say you earn $100,000 a year. As an individual, you might pay taxes on the full amount. But if you operate through a corporation, you can deduct business expenses, such as a company car, office supplies, and travel, before calculating your taxable income. This can significantly reduce the amount of tax you owe. Actionable steps. Consult a professional. If you're considering setting up a corporation or LLC, consult with a tax advisor or attorney to understand the best structure for your situation. Small business benefits. You don't need to run a large company to benefit from a corporation. Even small side businesses can take advantage of the tax benefits of incorporation. Reinvest tax savings. Use the tax savings from your corporation to reinvest in other income-generating assets, further building your wealth. Understanding how to leverage corporations is a powerful strategy for anyone serious about building and protecting their wealth. Part 6. Work to learn, not just to earn, building valuable skills. Kiyosaki emphasizes the importance of working to learn rather than just working to earn. This means focusing on acquiring valuable skills that will serve you in the long term, rather than simply taking the highest-paying job available. In today's rapidly changing economy, skills are more valuable than ever. The right skills can open doors to new opportunities, increase your earning potential, and provide you with the tools you need to succeed in your own business or investments. Kiyosaki recalls how his rich dad advised him to work in sales, even though it wasn't his passion, because the skills he would learn, like communication, negotiation, and persuasion, would be invaluable in any business venture. Imagine someone who works in a job they don't particularly enjoy, but that offers them the chance to learn about marketing, financial management, or sales. These skills can later be applied to starting a business, investing in real estate, or managing their personal finances more effectively. Actionable steps. Identify skill gaps. Look at your current job or career path and identify any skills you're lacking that could help you achieve your financial goals. Seek opportunities. Consider taking on roles or projects that might not be your dream job, but will help you build these critical skills. Continuous learning. Commit to lifelong learning. This could mean attending workshops, taking online courses, or finding mentors who can help you develop the skills you need. By focusing on skill building, you're investing in your future earning potential and setting yourself up for long-term success. Part 7. Overcoming fear, taking calculated risks for financial success. Finally, one of the biggest barriers to financial success that Kiyosaki addresses is fear. Fear of failure, fear of losing money, and fear of the unknown can all hold you back from taking the necessary steps toward wealth building. Kiyosaki argues that fear is natural, but it shouldn't control your decisions. The key is to recognize your fears and learn how to manage them so they don't prevent you from taking action. Rich Dad taught Kiyosaki that everyone experiences fear, but the difference between the rich and the poor is how they deal with it. The rich learn to take calculated risks, knowing that even if they fail, they can learn from their mistakes and try again. Don't let the fear of losing be greater than the excitement of winning. This powerful quote from the book encourages us to focus on the potential rewards rather than the risks. Consider someone who has always wanted to invest in real estate but is afraid of the risks involved. They could start small, perhaps with a low-cost property, to gain experience and confidence. Over time, as they learn and grow more comfortable, they can take on larger and more profitable investments. Actionable steps. Identify your fears. Take a moment to write down the financial risks you're most afraid of. Whether it's investing, starting a business, or making a major purchase, acknowledging your fears is the first step. Educate yourself. Fear often comes from a lack of knowledge. The more you understand about the risks and rewards of a financial decision, the more confident you'll feel in taking action. Start small. You don't need to take huge risks right away. Start with small, manageable steps that will help you build confidence and experience. By learning to manage and overcome fear, you'll be better equipped to take the calculated risks necessary for financial success. Conclusion. Take control of your financial future. It starts with you. Rich Dad, Poor Dad isn't just a book. It's a roadmap to financial freedom. The lessons Kiyosaki shares about financial education, assets and liabilities, entrepreneurship, and overcoming fear are timeless and applicable to anyone, regardless of their starting point. Final thought. Remember, the journey to financial independence starts with a single step. Whether it's improving your financial literacy, acquiring new skills, or taking that first step toward investing, the most important thing is to take action. Don't just think about it, do something today that will bring you closer to your financial goals. If you found this video valuable, please give it a thumbs up and consider subscribing to the channel. Your support helps us create more content that empowers and educates. And don't forget to hit the notification bell so you'll be the first to know when our next video is out. We've got more life-changing books and financial insights coming your way, so stay tuned. If this summary has sparked your interest and you're ready to start implementing Kiyosaki's principles, check out the links in the description below for resources that can help you begin earning extra income and building your wealth. Whether you're looking to invest, start a side hustle, or learn more about financial strategies, these links will guide you on your journey.